Hi, I'm Oliver, trader and coach at TradeNeon. In this video series, I want to show you how to practically use our level of interest software. With level of interest, we provide a professional, manually conducted market analysis every single day in the most common futures markets, carried out by experienced traders. This analysis can be used to develop a long or short bias and to identify precise entry points at key levels for trades with high win probability and excellent risk-reward ratios. One of the most popular types of entry levels in our community are the dark pool levels. If you're wondering what dark pools are and how these levels are created, I highly recommend starting out with our tutorial video. You can find it on our website, TradeNeon.com, or directly here on our YouTube channel. In the near future, we'll also be publishing a much more in-depth video on dark pools, so feel free to subscribe to the channel if you don't want to miss it and want to learn more about this topic. Let's now jump straight into the practical part and take a look at what the S&P 500 did last Friday, May 16th, 2025. As you can see, we're generally in a Vanna bull zone, which is indicated by the broader green highlighted area. This means that based on dealer hedging data, we are more inclined to take a long bias. During the pre-session ahead of the US market open, the price managed to stay above the previous day's high for most of the time. However, right at the beginning of the US session, there was a sharp sell-off during which the market even dropped below the settlement price level. Following this, there were two pullbacks to the yesterday's high, but in both cases, buyers failed to push the price above the level and aim for higher prices again. Scalpers could have used these levels for short-term trades with small profit targets. Level of interest is not a trading system. The software shows us which price levels are attracting institutional trading interest. It forms the basis for dozens, even hundreds of different trading approaches. Existing trading systems can also be significantly enhanced with level of interest. Personally, I consider myself a more traditional day trader, trying to find entries that have the potential for longer intraday moves. I'm not interested in quick scalps. I wait for the market to reach a level where I see a strong reaction so I can position myself long in alignment with a broader uptrend and with a Vanna bull zone. As you can see here, the market reaches this dark pool level, which also marks the upper boundary of a Vanna bear zone from the SPX. Both of these areas serve as strong support zones in this context. As soon as the price reaches the level, I switch to the order book to observe how market participants interact at this point. Here you can see a screenshot of the situation in Bookmap, my preferred order book software. In the center, you have the price action shown as a continuous line chart. The turquoise and white bubbles on the chart represent active buy and sell pressure. These are market participants entering with market orders, aggressively moving the price. The many bright lines on the dark background represent limit orders. This heat map gives us a historical view of the order book. As you can see, just before and exactly at our dark pool level, the density of limit buy orders in the bid is the highest. This is no coincidence. It's directly related to the presence of the dark pool level. On one of the previous trading days, a large position was built by an institutional trader exactly at this price level via a dark pool exchange. Therefore, it's very likely that this trading interest will be reactivated once the market returns to this level. Level of interest allows us to see in advance where we can expect such setups. After most of the bid-side limit orders were consumed by aggressive selling, strong active buyers immediately stepped in and pushed the market price upwards, leading to this reversal move. There isn't just one way to take advantage of such a setup. I, of course, have my own personal approach and actually participated in this long trade by selling a put option. But there are various ways to benefit from such a scenario. Some traders enter aggressively, while others wait for more confirmation. As you can see, our level of interest analysis provides a clear framework to plan ahead what you want to trade and what to look for at each level. If the anticipated setup appears, it's easy to execute the trade with precision. Levels are always price zones where institutional interest is likely to emerge. Situations where we get pinpoint reactions to the levels, like in this example, aren't guaranteed, but they happen repeatedly and offer great trading opportunities when they do. We'll see each other again in the next video. Until then, best of luck and successful trades. If you have any further questions, feel free to leave a comment or email us at mail@tradeneon.com. See you next time.